Hello everyone and welcome back to Market Bites. Hope you are all doing well. The title, of course, will give it away, but the main focus is going to be on Nvidia this week. They had their earnings out yesterday, the biggest company in the world, and we'll discuss their result. We'll discuss how they're trading as of right now, 30 minutes since the cash open on Thursday. So yeah, let's get into it. But before we do, actually, I'm joined by Brett and Neja. Brett, first of all, how you doing, mate?
Doing good, doing good. We finally have a little bit of consistent sun and some decent warmth here in Michigan, so that's nice. But if anyone hears a snore or a grunt, just as a disclaimer, right at the front of this baby, my dog is in here after a little work with the vet, so keeping an eye on him. But he's a little on the noisy side. How are you guys doing?
Yeah, very well. Neja, how you doing?
I'm pretty well, thank you so much. I hope that your dog will feel better soon. And you, Sam, how are you? I bet you
Yeah.
feel like awesome after Arsenal beat the
Yeah,
winning
do you know,
Premier League.
do you know what? Last sort of couple of days, 36 hours or so, I've just been pinching myself. Like, is this real? Have Arsenal finally won the league after 22 years? And we have, unless I am dreaming right now, but hopefully this is real. This is reality. I was just, funny enough, mentioned Arsenal hadn't won the league for 22 years. I was just looking at the biggest companies in the world, considering we're talking about Nvidia, but decade by decade. So in 2000, it was Microsoft. And then at the beginning of 2020, or 10 years later, it was Exxon, then PetroChina, then Apple. Microsoft slipped down to fifth. But 20 years later, at the beginning of 2020, Microsoft took the top spot again. So these things can happen. You can go 22 years without being the biggest company in the world or the best company or best football team in England. You've got to have hope. Of course, though, right now, Microsoft aren't. They're the fourth biggest company in the world, and the biggest is Nvidia. As of, I think, last night or roughly around about now, their market cap is 5.38 trillion, which is just crazy. It almost feels like it won't be too long till we do a podcast and we talk about them being at six. Alphabet or Google, if you like, down in second at 4.6, Apple 4.4, Microsoft way off at 3.1 trillion. Brett, I'll come to you first. I'm looking at Nvidia's share price right now, and it's 0.2%, which probably means it was actually an incredible earnings report then.
Yeah, I mean, I think honestly, the stock would be getting killed under this scenario. But even if the company missed expectations, there's no world where this wouldn't be a tremendous quarter when you're looking at even the quarter to quarter, but the year over year comps. I mean, 85% growth on the top line for a $5 trillion company is one of the more crazy things I've ever really heard in this. It's like when people were screaming about a bubble in Nvidia, it was like, yeah, but do you actually see the numbers here? I mean, there's almost $50 billion in quarterly free cash flow is like a number someone would have made up 10 years ago about a dream company. It does not come across that, you don't see this type of growth at this size. And then you look at the valuation, it's trading low 20 multiple on forward earnings basis is like, this type of stuff is not disappointing. But when you look at the stock's reaction, it is disappointing. If you're a shareholder, I mean, it's flat after a monster quarter. It is up a lot in these last couple of weeks. It finally joined along this rally with the rest of semis, the rest of tech, the memory stocks, the DRAM, NAND makers, the CPU guys. But I mean, how do you not look at this, which is clearly the blue chip of blue chips, not just within tech, not in semis, but in the market. And it's barely outperforming the NASDAQ 100. It's up close to 20% on the year. NASDAQ's up 16. So I think from that perspective, it is disappointing. It does not take away anything from the quarter. It does not mean it's not a good company, a good business, a good stock. It goes through these periods where it kind of trades, it has these big runs and it trades sideways. But I think there is got to be a little bit of frustration amongst the shareholder base, even though it's just the market. It's the way the market is treating. It's not anything the company's doing specifically.
I think that the issue is that Nvidia is really so wildly held among investors, and also that it became kind of a victim of its own success, because the company reported another like unbelievable quarter, just like Brett, you said, revenue up like 85% and data center revenue up 92% and guidance exceeding expectations. Again, you would expect at least I don't know, 10% upside, but no, we are only seeing those 2%. And I think that investors are focusing more on what is going to happen in the next few years and not what's going to happen in the next quarter. They're focusing more about 2027, 2028 and beyond, because and the questions that are on the table are like, can hyperscalers keep spending that aggressively forever? Will margins stay this high as are right now, above 70%? And will the competition like follow up with their development? So I think that those questions are kind of putting this positive reaction a bit on hold.
Yeah, it's really interesting. I saw loads of people tweet yesterday, and I absolutely agreed with this view ahead, and this is before the earnings come out, where it's like Nvidia are likely to absolutely smash everything, and the stock is probably either going to stay flat or go down. Like you said, Nezha, they're a victim of their own success, and it does pose an interesting question for investors of Nvidia. I mean, let's say you're a very long-term holder, you've booked profit along the way, you've made incredible returns. Amazing. You're just holding the last bit for eternity, and if it goes up another few 100% over the next 5-10 years, fantastic. You've already made a massive win out of it. For those that maybe bought the dip in Q1 last year, after DeepSeek, and then the tariffs, so there was a discount across the market, you bought Nvidia, you're doing well now, probably 100, tens of, if not 100% up from some of those lows. If you bought the dip this year when the general stock market was down, S&P was down 9.9, the Nasdaq a little bit more, yes, it went sideways for a while, but it went up 30% in a couple of weeks, if not 40% to the high. So again, you're happy there, but then it is tricky, because when you look at it over a few month period, from end of last summer to early part of this year, it did nothing really. It was just in a range, and that is obviously frustrating for shareholders. So it's an interesting question for people out there that aren't invested in Nvidia but are now tempted to. You can't really sit here, Brett, and say it's going to go up another 1,000%, in 2-3 years. It's not that stock anymore. It's just too big.
Yeah, it becomes like an interesting. Well, first, I think it's an interesting view. Like I think it's like a case study in sentiment, right? I mean, when we look, like what Nezha brought up, like at some point is, I mean, God, imagine what happens the day Nvidia gives us a top or bottom line miss and guidance is below expectations. This thing's gonna get killed. If this is what a good quarter reaction looks like, a bad quarter is going to be punished swiftly. But I mean, for I think at this point, where's 2026? I mean, I think they've been talking for a couple of years. What happens when margins erode? What happens when that demand comes in or competition increases? We haven't seen it yet. And I'm not saying that won't happen. Eventually, that is going to be the case. But so far, we haven't seen that play out. But the company has continued to deliver these top and bottom line beats with the above expectation guidance, even when you throw in curveballs like the situation with China and dealing with different export restrictions. You look at the last 3 quarters coming into today, it's very well likely going to be the 4th time in a row this company has delivered a great quarter and then fell on the results. It's just sort of this like interesting psychological component to the market. Everyone thinks of the market in like X's and O's, like numbers and balance sheets. And it really does come down to investor sentiment and like sort of how people are positioning around these bigger firms that are in the spotlight. But to your point, at its size, how much room does this have to grow with? I mean, unless you're talking like pure multiple expansion, I mean, at 5 trillion, just to double, we have to go to 10 trillion, like just to get that next 100%, like that's an insane number. And when you look at like Intel and AMD, and say you don't own those names, but you own Nvidia, you're like, well, this isn't fun. Like I own the good one, but all these other ones are up, 4, 5, 10x. It does get frustrating at a certain point, but they have that room to go. It's easy to go from 50 billion to 100 billion. It's hard to go from 5 trillion to 10 trillion.
Yeah, I mean, Nedra, I come to you in this one because I reckon if I'd woken up this morning and put myself in most investors' shoes here, and Nvidia was down 15%, people would, be tempted by that. And I wonder if that's how people are now going to view Nvidia. Like Brett was saying with the Intels and AMDs, they're the shiny. I'm not going to say new toy because they're not new companies, but that's almost what they're like at the moment. Big results, flying, playing catch up. Whereas Nvidia, biggest company in the world, like Brett said, for it to double, it's going to take a lot. But maybe investors might look at this and say, okay, if you give us a 20% dip, that's when it becomes interesting again. And maybe that's the approach people might take from here on out. What do you reckon?
Yeah, I think so. I think that if we would see a bit of correction on the market and Nvidia falling for 10 or 20%, as you mentioned, I think that we would definitely see retail investors buying the dip. But talking about the stock, like what would we need to see to really see the stock dropping, like Nvidia itself? I think that we don't even need to get like terrible results. We just need slightly
Yeah.
less perfect results for them to drop. But if we take a look at the AI infrastructure itself, I think that we are near this adoption phase. So we still have a room to grow, because if we compare AI to smartphones, for example, I think that we are somewhere around app store development, where everyone sees opportunities out there, but no one really understands how large ecosystem this could be. And I think that this monetization phase is still under development, and there is still room for growth. But 10 trillion, that seems like so huge that no one really imagines how far we need to go to reach this number.
Yeah, it's incredible.
I
Absolutely
will say at the
incredible.
same time, though, a few years ago, 5 trillion seemed like
Yeah.
an insane number too. So it is one of those things. I mean, maybe, but like before COVID, even $1 trillion was like, I don't know if we're going to see that anytime soon, and now it's like we have all these. I mean, Walmart's almost $1 trillion company. So
Did
Yeah.
you imagine yourself talking about $10 trillion company a few years back?
no, even like a year ago, 10 trillion, $50 billion in quarterly free cash flow. These numbers are like, they seem like they're made up. It really goes to show like how instrumental this management team has been at putting together a really strong business.
Yeah, they've done absolutely incredible. And I guess for those people that are maybe put off at, the price of Nvidia at the moment, you just have to look throughout history, recent history, last or earlier this year, for one, with the geopolitical tensions, 2022 with the hawkish central banks, inflation rising, and then the global pandemic in 2020, where you got massive discounts for really, really good big companies. And they were the opportunities, weren't they? And maybe it is a case for people sort of sitting on the fence at the moment. That's what they're waiting for, a bigger correction in the market to get into these bigger names. And in between all of that, that's when you take a little bit more risk maybe on your AMDs and your Intels and stuff. I mean, I just reading, this morning, price targets. There's been a lot of updates on that, and they're all obviously been raised, from, I'll just read a few here that are the top of the list. Baird have gone from 300 to 500. Bank of America Securities 320 to 350. Wedbush 300 to 330. Jefferies 275 to 300. Evercore ISI 352 to 413. A lot of raises, and you can understand why, can't you? I mean, you do have some that are still keeping it under 300, but not many. In fact, just two on this list, which is Morgan Stanley 285 to 288. I wouldn't even have given an update for that. And then Goldman Sachs 250 to 285. But you can't really sit here and be bearish. But we had it where, because obviously we discuss Nvidia every quarter, where it's been an incredible earnings. It's come, the share price has dropped, but we've still sat here every time and be like, it was an incredible report. And just sometimes, if it's been on a build up into the release, you could argue it's been a bit priced in, and sometimes you just need prices to go down a little bit more for there to be some value. Another thing that they did, they lifted the quarterly dividend to 25 cents from 1 cent. And obviously this is going to help Jensen Huang with a very large pay packet each year now or each quarter, which he absolutely deserves, I would say. I mean,
Certainly. Yeah.
I saw some two different opinions on this, and it'd be interesting to know if either of you feel strongly about one way or another. So someone was saying Nvidia increasing their dividend is a very bad sign, in my opinion. To me, it signals they don't know what to do with the cash anymore. Nobody owns Nvidia to collect a 0.5% dividend. And then another option of this is that it opens up to new investors, new funds, and rewards long-term holders. I would say, I mean, I just don't really think you can speak too badly on Nvidia at the moment. So I would go more to the other side, Brett.
Yeah, I mean, when you look at, no one is buying Nvidia for the income. This is not like
No.
this isn't a dividend stock, in the more traditional sense. But it's hard for me to look. I mean, when the company's generating cash at this magnitude, I do understand the argument where they should have the the growth to invest in rather than paying it out in a cash dividend. Hey, reinvest it in the business, accelerate growth. But this is, I would say, like a pretty unique situation in that one, Nvidia is generating such a substantial. I mean, they're investing in other companies too. They're not. It's not like. I mean, they're to the point where they are past the capacity to invest in themselves. I think we've already hit that. Like, there's so much momentum in the business that more money into it is not going to move the needle. So then they looked at other companies and took stakes in different firms. Then now they're looking at the dividend, and the buyback is hilarious. It's like $80 billion buyback, which in any other realm is like buying a huge piece of their float. And for a $5 trillion company, it's like a drop in the bucket. I mean, it really is crazy.
Yeah.
I have to go with you too, because I mean, we can't compare them to any other company out there, and they have enough free cash flow to support all of it, buybacks, dividends, and also growth. And none of the segments will be hurt if they raise the dividend as they did. So I think that there is no issue in it. And also, as you said, Sam, it gets open to more investors out there. So it's even more potential for their stock to grow.
I would say so.
I think the craziest thing to me with Nvidia, and Sam, maybe you want to pivot off of this after, but I mean, when you look at the stock, I guess, like on the technical side, it's been like this very clear but contained sort of series of moves. It was like first it was stuck between 40 and 50, like no good news could get it out. Then it broke out and it was between like 90 and 150, and it was the same thing, like multiple quarters of this chop. And then, we've blown through now, we're well over 200, but it goes through these like ranges where you're sort of stuck waiting for that like breakout move and you go into this new range. But even when we get it, the business has been so strong that the valuation is not it's not an absurd number. They're not sitting here trying to justify how to own it at this level, at this price, because I mean, at the lows, I'm looking at them now, the lows from the tariff sell-off last year put the stock down to about 20 times forward. The lows of this year, about 20 times forward earnings. We're trading at 23 times forward. This is not a ridiculous number in any way, shape, or form for this type of quality. So from a fund manager's perspective, which I'm not, but from their perspective, it's not like, this stock is too expensive, it's run too far, I can't own it. And maybe to your point, that opens the door a little bit for the income side of the income funds and that sort of thing.
Yeah, it's really interesting just talking about that, and maybe those are the opportunities, aren't they, just sort of adding to it? Because on the flip side, I listen, obviously people buy and sell stocks every day, but when it comes to selling Nvidia, if you're owning it, I don't see many people wanting to exit their full position. Biggest company in the world, incredible earnings report. I can understand maybe trying to get a bit more reward elsewhere, but you're still selling the company that's traded and had the biggest market cap we've ever seen. So I would say, in summary, the AI train is still very much running, isn't it? And a lot of companies have benefited from what Nvidia does too. So overall, I think we can sit here and say we're happy, because if Nvidia missed those top and bottom lines, we wouldn't be. The market would be down considerably today with the weighting that it has on both the S&P, the Nasdaq. It's correlation with other companies. So, yeah, overall, I think we're pretty happy. Agreed, Brett and Nezha?
Yeah. And I can't even imagine what would happen if they would disappoint or they would report that they don't see that much investing from like hyperscalers like Meta, Amazon, like Google. Like, what would the effect be on the market? I was thinking about that before we started recording the podcast, and I can't even imagine what the market reaction would
I
be.
mean, it would sell off straight away, wouldn't it? Surely.
Yeah. I mean, Nvidia's blue chip today, but I mean, I think people forget how this thing has gone through some like harrowing pullbacks.
Yeah.
I say that as a shareholder in this name too, that has been in and out for years. This thing has gone through some, I mean, like losing 2/3 of its value type of pullbacks. So recently too, this isn't like, in 2000. I think COVID, it lost about, like in the 22 bear, it lost, I think about 2/3 of its market value.
Yeah.
I think that we can all say that the results were great, the sentiment is great, but everything can turn like so fast that we can't even imagine.
Yes. Fingers crossed.
Nezha, to your point, I mean, it wouldn't even almost have to be their results. It could be like Meta or Alphabet trimming their CapEx outlook for the year. That would, I think, could throw
or the other way
a wrench
around.
into the stock run.
Yeah, absolutely. And it wouldn't be long, you'd imagine, for 5, 6, 7, 8, 9, 10% dip in the broader market off of a headline like that. And I think it would come pretty quickly. It'd unravel very fast. And yeah, maybe that is what is going to happen in the future at some point. But for now, the show goes on. Brett and Nezha, as always, thank you very much.